Assalamu alaikum friends. Welcome to lecture 67 of strategic business reporting under analysis and interpretation, and we are now going to do statement of cash flow. So earlier we have done the policies, the impact of policies and the estimates and errors and all. Now we are going to do the statement of cash flow, the usefulness of it and how to analyze a company using statement of cash flow. So let's start. What are the usefulness of statement of cash flows? Definitely there are some usefulness of statement of cash flow. That's why we are using this to analyze the company's financial position. Okay. Number one, as we all know, the problem with your statement of financial position and statement of profit and loss is profit. We are using profit there. Okay. And profit is an accounting thing. Okay. You can manipulate profit easily by using your own judgment. Okay, and we know that we have some choices of accounting policies. We have earlier went through that the previous lecture, that because of some accounting policy choices it can have an impact on our uh, judgments about the company's financial position. Okay, but on the other hand, cash flow is not like that. Cash flows we don't have to use judgments. Why? Because they are objective and you can verify them. How? When you are receiving the cash, we must be having some invoices, and when we are paying, again we'll be having the amount that are paid through a bank statement. Okay, through our credit cards, something it will be there, unlike profit. So that's one reason why we are using statement of cash flows to analyze, because cash flows are objective and verifiable. Second, cash generated from operation. This is a very useful indication. It talks about what? Quality of profit. Okay, it talks about quality of profit. Good quality profit will generate cash. Okay, you will soon come to know about the second point through a question which we are going to do in few minutes. Okay, third, statement of cash flows, they provide valuable information to stakeholders on what? Financial adaptability of an entity. It talks about the financial, how solvent the company is, the financial liquidity, the financial solvency, the financial adaptability of the company. All these things you will not come to know through statement of financial position or statement of profit and loss and other comprehensive income. Only statement of cash flows will give you this information. Okay, and the last usefulness is they have some predictive value. What is the meaning of predictive value? You can predict the future based on the current cash flow information. You can see whether it will increase or decrease, the cash flows are likely to recur or not. So because of this, it will help the stakeholders in making some judgments about the number one, amount. What is the amount of the cash flow, or the timing that you are going to receive the cash flow, and also the certainty of future cash flows. Okay, so now let's start with test your understanding to better understand this, how to use the statement of cash flows to analyze a company before I end this video. Test your understanding 4. So in this question, we have been given the statement of cash flows. Okay, the indirect method has been used. As you can see, we have from operating, investing, and financing activities. Now, the requirement says from analysis of the statement of cash flows, what conclusions would you draw about the company? Okay, so here you don't have to make any statement of cash flows. No working is required, nothing, everything has been done for you. What you need to do is you just have to analyze the company based on the information, the figure that has been given to you. Now, it looks very simple, right? We'll say, okay, for example, if I go under operating activities, you can say, okay, depreciation is this much, the cash flow from operating activities is 3 million, and then you can talk about line by line. For example, you can say inventory has been increased, it's an outflow, receivable increase, it's an outflow. But in reality, this is one of the difficult part for students. Okay, I would not say difficult. The reason, because people misinterpret this question. They often try to uh, come up with some answers, okay, which is not suitable enough, or some points. Okay, whereas for questions like this, you don't have to struggle so much, because the reasons you can take it as it is from your answers, from your textbooks. The answers are there. You can take it from there, but you have to know which one to apply what time. For example, if it is increase in inventory, what are the conditions inventories can increase? why it increased so much. Okay, for example, there has been and they're selling non-current asset. There's a huge amount which has been sold under property, plant and equipment, which comes under investing activities. Why is it so? Why is it sold? So you have to interpret the reasons behind that, the root cause. You understand it? Because the question is, this is about analyzing the company. This is not about preparing or someone has done it incorrectly. Now you say, okay, what are the accounting treatments under IFRS or IAS? It's not that. There are two types of question that can come from this. One, which comes in your question number one, in your group accounting. Okay, that's different. There you have to talk about the accounting treatments. You have to prepare some amounts. You have to calculate some amount. But when it comes to analyzing, okay, you might have to do some ratios, or if you are given the cash flows like this and you are told to analyze, you have to explain, give reasons, not just calculate. Calculation part is done. But why? The question is why this amount is like this, why it is increasing, why it is decreasing, how it will have an impact on the other places. Okay, and overall impact you have to give. So now let us read the answer. We are not going to read one by one the line, but the main point is you have to understand when you're giving answers like this. Okay, you have to divide it into three separate topics, subheadings you have to use. For example, operating cash flow, investing, financing. You're not putting all the three together. Okay, and then one is final summary, final conclusion, where you are taking the results from operating, financing and investing and telling one thing, whether this company is going in a good direction, it is having a good cash flow, financial adaptability is there or not there. Okay, so which is known as high level analysis. If you say this is like the main summary, if you see you have four subheadings here. Operating cash flow, okay, it's not only important to get the right answer, what's most important is how to present your answer. It's very important. Okay, investing cash flows, then we have financing cash flows. Okay, so that's it. Okay, so before we go by this one, okay, you can start it in any way. Either you can give the high level analysis, the main summary first, and then divide it into three: operating, financing, investing, or you first start with operating, financing, investing and give your detailed summary later. Any method you can use. Okay, so first let us go by their method. Okay, high level analysis. Okay, let's assume that we are using this method. First we are giving the main summary. Okay, so main summary, you don't have to do too much, you don't have to do any calculation, just skim through it and see. If you see under operating, it's just 3, which is very less amount. Okay, and if you see investing, it's an outflow of 10 and financing, it's what, 8. Okay, inflow, and if you see it's a negative balance, okay, at the end, which is not good for your company, not good for this company. That's what you can see. Okay, so that's what you need to write. Okay, the way you write it's different from person to person, but the main things has to be there, that this is having an overdraft, they are having some problem, there will be some risk, this word has to be there. Okay, so they have generated a cash surplus during the year. Okay, how can you say they have generated cash surplus during the year? If you see this one, increase in cash and cash equivalent. Earlier it was -5. Overdraft was 5. Now it's 1. It increased by 1. So that there's an improvement. It's a cash surplus. Okay. If it's a negative figure, you have to say it's a deficit. Okay. Cash deficit. But this is cash surplus. Okay. But if you see this surplus is just 1, is very small compared to the size of the outgoings. That means your cash outflow is more than your inflow. That's why at the end also you are having a negative. Okay, if you see in the opening balance is 4, sorry 5, and it's increased by 1, so it's only 4. It's still it's in outflow. Even after that increase in 1 also, still your cash flow at the end of the year is -4. It's not positive. That means this is very small compared to your opening balance. Okay, so these are the key points. These are the things you need to write in your answer. Not just saying that earlier it was 5, now it increased 1 and then it became 4. No, it's not like that. Okay, so you can even write, you can even state that they have a negative overall cash position. Okay, it has overdraft. They have overdraft. How do you know that they have overdraft? It is said here. Uh, they have loans outstanding at the year end and repayments of 7 million annually in each of the next 4 years they have to pay. Okay. So they have a loan. Okay. And so looking at this opening, you know it's an overdraft. You can understand because it's negative. Okay. So still they have an overdraft. Okay. So because now they have an overdraft, they have an amount, the loan. It's a risk because they have to, it will increase their payment. And because of this, there's a risk that this overdraft could be withdrawn. Remember the disadvantages of overdraft. Whenever an overdraft is given, remember the consequences of it so that you can write in your answer. One risk is that anytime the bank can say we are withdrawing the overdraft. We are not, they are not giving you overdraft anymore. So this will place a high amount of risk. So this is a small summary. Here, if you have seen, they are not talking about individual items here. What's happening under operating, investing, financing. Generally, they are giving you. That generally means you are analyzing this area, this four area, and saying it has a surplus. Okay, this is surplus. Then this is an overdraft. Because of overdraft, risk is there, interest is there. Okay, so they can withdraw. The risk is withdraw. They can withdraw the overdraft anytime. That's a risk and interest also. So because of this, again at a higher risk, they're risky. Okay. So your final conclusion after you have analyzed is that is risky. This company is risky to invest in, looking at its financial position. Okay, now we are going to break down into operating. You have to do it. No one will say you, okay, talk about operating investing. They will just say analyze the company. Analyze means you have to break down like this and analyze. Okay, so when you come to operating activity, okay, you start with what? Okay, go by this order. It's very easy when you talk in this order. When you're writing also. Okay. For example, you don't have to write everything line by line. You can group some items, similar items together. For example, these three things. You can group them together because this is working capital. Okay. Then comes, these are the adjustments, finance cost, depreciation, profit, reduction. These are some adjustments which are made to profit before tax. And then your interest and tax paid. So you can talk about this in different paragraphs you have to talk. And remember, keep a space when you're mentioning it in a different paragraph. Okay, it should not be in one single paragraph. Everything has to be broken down. Okay, so by looking at this, I know the first paragraph only talks about the operating profit. It has an operating profit of 40 million. How do you know it has an operating profit of 40 million? $35 plus 5. This plus 5 before deducting the interest. Okay. So 35 plus 5. Operating profit I'm talking about. From operating profit only you deduct finance cost and then you get profit before tax, right? But operating profit is 40 million. Okay. So you start from there. That is your starting point. You know that since I have started with profit before tax or operating profit, you can start from there. That's your starting point under operating cash flow. But if you look if you look the cash that is generated from operation is only 18 million. Okay, out of this 18 million, 40 million is a profit. Okay, 18 million. Where are you getting this 18 million? This one. Cash generated from operation. Remember, I'm putting a strike mark here because this is very important. You have to talk about cash generation generated from operation. This is separate and this 3 million is separate. Separately, you have to mention this whenever a question comes like that. Okay, most of the time, even in your question one in group accounting, they ask you, okay, make extract showing cash generated from operation. That's why this is very important because examiners are more concerned about your adjustments from profit before tax rather than getting this figure. Okay, so 18 out, that means out of profit 40 only 18 is cash. So what does this suggest? Okay, you see this is called analyze. You're analyzing this. This is what is the meaning of analyze. You're not just giving the figure but you're giving the reasons also behind it. You are adding value to that. You understanding? So this suggests that profit is very low quality and it is not backed up by cash. Why? Because profit is 40. and cash is just 18, which is very small, not even half, not even 50% of the profit is cash. So you're understanding the quality of profit is not good enough, it's low quality. This operating cash flow talks about the quality of the profit basically. Okay, now the second paragraph. First paragraph is over. Second paragraph talks about what? It talks about inventories. You can divide like this: inventory, receivable, and you can talk separately. Wherever you are having issues, you can talk about that. For example, if you see here, these are adjustments, so not much there to talk about it. But here you can talk about increase in inventory, receivable, and payable. Okay, payable you don't have to talk much because it's a positive sign. Okay, even though it has some disadvantages also, but let's not talk about it. We are more concerned about the outflows. Okay, 19 and 14. Because see, whenever you are analyzing, why do we analyze? To see what are the risks, what are the problems. We are more concerned about the negative side than the positive side. You understanding? So you try to bring out the negative side rather than all the things in your answer. Okay. So if you see here, only inventory increase, receivable increase, both are not a good sign because it's an outflow, 19 and 14. But we are not just saying outflow is 19, outflow is 14. We are now giving reasons. Okay. It can come up to 4-5 lines or 1-2 lines also. It does not matter. Don't worry so much about the number of lines that I have to write per point. Some points you have to write 1 or 2 lines. Some you have to write 5 or 6 point lines. Depends. So second one, we are talking about inventory. If you see, inventory increased. Okay, why inventory increased? Okay, you don't have to worry so much. You don't have to know 5-6 reasons or 10-20 reasons why inventory increased. Just knowing one reason or two reasons is enough, more than enough. If you know one reason also properly, that's more than enough to write in your answer. One reason why inventory could increase. So one reason is maybe it's a response to bulk order. Because if you're buying huge heavily, okay, buying more inventories, you get a discount. So because of that, you're buying, your inventory increases. Okay, inventory increases means it has, you have to talk about it, whether what is the impact on the cash flow, negative or positive, that you have to talk. Just writing inventory increase is not enough. So this will have a negative impact on the cash flow. We know it's an outflow. So rather than writing it, see, when we go through the calculations, we know it's an outflow. But you have to say that this has a negative impact or positive impact on the cash flow. Okay. This might be, so your main analyzation is here. Let me highlight it for you. Okay. This might be a response to bulk order. This is your analyzation skill. All these things you were just setting up, you're just writing. Okay. All the things until here, cash flow, we know that. You're just repeating it. The number part you're just writing in sentences. Inventory increased, it will have a negative impact. But why? Because, see, the analyzation means why something happened. Why? The reason behind it. This is called analyzation skills. This is what you're supposed to do. Not just simply write increase, decrease, okay? For everything, anything. This is just from inventory I'm talking about. So this might be response to bulk order. Okay, another thing, alternatively, second point they are giving, this is second point. Okay, you can have one or two reasons. Inefficient inventory management. Maybe you're not managing your inventory, you don't know what's in the inventory, so you again go and buy that same inventory, double. So again there's a risk. Because of this, you always have to first say why and the impact. Always go by this. Okay, why and then the impact. You can never go wrong if you follow this method. For any answer in ACCA, not just SBR, I'm telling you, this is the whole idea. Why something happened, increase, decrease, negative, positive, and the impact of it, whether good or bad. That's it. That is what you have. Even in SBL also, this is the thing that you have to know. So exposing the company, you have to mention the company also. Don't forget that, to the risk. So the impact is that there will be a risk of inventory obsolescence there. Too much of inventory. Second thing is receivable. You see, each thing is talked in different paragraph, and the first word in your paragraph, in your sentence, should be able to tell you what you are writing in that paragraph. So when you are writing, starting a paragraph, be very careful. What is your first word, first line, what's first sentence? First sentence matters a lot because it talks about what you're writing, and last paragraph is your conclusion. Okay, so receivable. If you see any paragraph, the starting word, okay, let me highlight it for you. Here it's operating profit. I know it's about operating profit. Here it's inventory, first line. First, in the first line only of the sentence, in the paragraph. the word is there. Here it's receivable, so I know it's receivable. Here it's about interest and tax payment, so I know it's about interest and tax payment. Okay. So second is receivable. We know receivable increased. You can write it. Okay. Why it increased? The reason is here because customers are paying more slowly. Receivable increase means customers are not paying you fast. They are taking more time to pay you, which is not good for you. Why? This is compensated how? By taking longer to pay its own supplier. If you see your supplier also increased, your payable also increased. You see how you are linking this from this? You should be able to do that. The more you are able to do it, link one thing with the other, the more marks you are securing for yourself. Understood? You're in a better position if you're able to do that. Okay, I'm not saying that uh, you should do it all the time, but the more time you can do it, the better it is for you. Okay, so payable. You see, payable also increased. Why? Because if customers are taking more time to pay you, you are also taking more time to pay your supplier because you need that cash from the customer first and then only you can pay. That's why it is compensated like that. So because of this, I told you there's a risk disadvantage. What is that disadvantage of paying your supplier, taking a long time to pay your supplier? Suppliers can tighten or they can remove the credit term. Suppliers does not like it. Remember that. Even if it's good for your cash flow, it's not good for the supplier. They don't like it. They don't like waiting for their money. Understanding? So either they will tighten next time or they might not give you any credit, better credit terms next time. So risk you have to always talk. And the last one is about mandatory. See, interest and tax payment, no matter what, are mandatory. Their nature is they are mandatory. You have to pay them. So if you see here, okay, out of 18, 15 is invested in interest and tax only. So you're only left with 3. That's it. 3 is very small amount. Understanding? So 3. Make sure that you write the number also. It's better if you can put that one number in your description also. It shows you have understood everything. So it's a small, use adjectives. Okay? Huge, big, significant, small. These adjectives are it will help you a lot to build up your answer. So small cash surplus of 3 million. If you're using adjectives, you don't have to explain so much. Using one adjective is enough. Saying that it's small is enough. You don't have to repeat this again. From operating activities. Okay. So if you see, now they are linking this with this with what? Financing and investing. This operating inventory. See, if it has an impact on one thing, it will have an impact on the other areas also. It's not just that operating activities are being affected. The 3 million is very small. It will have an impact on investing and financing activity also. How? Because you are not generating enough cash from operating. Okay, it will be hard for you to invest in PP or to repay your loan. Repaying your loan comes in financing, and investing comes in investing activities. And so fund has been obtained from other less sustainable resources because you cannot take a loan. Why? You have to repay the loan. You cannot take more loan. You only have small amount of operating activity. Because of that, you have to take funds from other areas which might not be sustainable for you. Okay. So investing cash flow. Now we are moving on to investing cash flow. If you see investing cash flow, there are only two things. One, you have proceed. You are selling your property, plant and equipment, and you are purchasing a new one. 30. So it's an outflow. There are two things only. Okay. So you can say that they have invested. Okay, if you see, this suggests that productive capacity can be maintained or improved because they have invested in this one. Okay, but it should be noted. It should be noted means you are bringing this to your attention. These are some techniques to write your answer to make your answer look better. You don't have to be very sophisticated with your English. You don't have to use very difficult words and sophisticated. No, simple words, but the way you write matters a lot. Okay, rather than because students often think that if I write too much I will get more marks. That's not true. You can make it short also like this. 4 words. It should be noted. That's it. Okay. That substantial receipt has been generated by selling. Substantial receipt you have given. You have got by selling the property, plant and equipment. You have got 30, 30 or 20. It's 20. 20 million. Earlier you were having 3 million from operating, but from investing you are getting 20 million, which is good. Substantial amount. Substantial receipt. It's a big amount. by selling this one. But is this a good thing or not? It's not a good thing. Why? It's not recurring. See, you sell property, plant, and equipment and get the cash flow. It's only one time. You don't sell it often. Operating activity is not really. Operating activity, the higher the better it is because it's recurring. It's from your trading activity. But investing, selling property, plant, and equipment and getting a huge amount is not a good thing because it's only once you are getting. It's not recurring. So if you don't get this receipt, what happens? There is an overall decrease in cash and cash equivalent. Forget about financing. Don't talk about financing. Just operating and investing, if you see up to this, you will be having a negative. Why? Because from operating, if you are having just 3, let's say you don't have that 20 million. And you are selling for how much? You are purchasing a property plant equipment for 30. So 3 minus 20, 30 is 27, negative 27. Already you have a negative. I suggest 5. So you can see it will decrease. Understanding? You don't have to obviously show those figures, not needed, but for your explanation, I'm understanding, I'm just showing you. Okay. And if you see high level of PP disposal, if you sell a property, plant, and equipment and you raise a high amount, it again raises concern. It's not a good thing. Why? What are the concerns? Concerns means what are the questions? Whether the assets are idle assets, which might require impairment, that's why you're selling it, or is it being forced that you have to sell it in order to raise cash? Because if you're selling property, plant, and equipment to raise cash, means your business is not in a good condition, good financial condition. Okay. And finally, financing cash flows. Okay. So Tuet has repaid. If you see, they have. Okay, let us go to the financing activity now. Financing activity, it has only 2 things. Okay. Normally dividend paid also comes, but here we don't have any dividend payment for this question. One is share. We have issued share and got 15, and repayment of loan. If you see, we have a repaid loan 7 million. So they have repaid. So immediately you start by repaying of the loan. So because of this, what happens? You are saving interest also is reduced in the future because they are repaying the loan. So lower loan means lower interest. That means you are freeing up the operating cash flow. Why operating cash flow? Where do you pay interest from? Operating cash flows only. If anything happens with interest, your operating cash flow suffers. Lower the interest, higher the operating cash flow. You understand? So why this loan repayment is possible? Only because of the share issue. Earlier you have issued a share. Okay. You see here 15. Otherwise it would just be 77 only, negative from financing. So you had issued share, got some cash on there, you can pay the 7. Okay. But remember, even the share issue also, raising finance through share issue also, you cannot do it forever. There is a limit to that. You cannot do share issue as much as you want and anytime to raise fund. It's not a good thing. It's not a sustainable method. This is the reason why you need high operating cash flow. See, in a business, the most important area is your operating cash flow more than you're investing in financing only. Because finance only for short term is good, but for long time it's not a good method if you have to rely on your share issue or your loan capital or your. It's not good. Same like investing. You're selling non-current assets to raise cash is not a good sign. Okay, 1 or 2 time is okay, but if it happens, if it's a recur, then it's not good. Most important is operating cash flows. Therefore, this is required if they have to meet their future loan repayment. Because remember, loan repayment you have to do does not matter whatever the position of your company. You have to. That's why operating cash flow is very much required. Other areas you can here and there do some adjustments, but not with loan repayment. That you have to do it. They have not paid a dividend this year. If you see, okay, if you see, usually dividend is paid, but here it's nil. So you can talk about this also. Okay. Each point will give you one mark. So just count how many points you are writing into this. This shall tell you how many points you will get. So they have not paid a dividend, and if they have not a paid dividend, that is also not a good sign. Why? Because shareholders will not be satisfied. So no doubt due to its, so there is no doubt why dividend is not paid. It's very clear why dividend is not paid this year. Why? Poor cash position. Because cash position is not in good. That's why you can cut out on dividends. So because of this, what happens? Remember why and the impact. Impact is this will deter the potential and the current investors from providing further resources. No one will give you more resources. Shareholders might not want to invest there anymore because they're not receiving dividend at the end. At the end, what matters is shareholders should receive their dividend. If they're not getting, why would they invest there? Understanding. So this is the overall. And you are analyzing this company. So you have analyzed. Okay. So that's it. So that's it for today, and tomorrow we'll be covering additional performance measure. Till then, thanks for watching and see you in the next video.